A lot of people say that chip makers are the future, and if that's the case, why are the chip maker stocks trading at such low valuations? That's something that I want to cover in this video. So guys, as you smash that like button, let's get into it. What's up guys, welcome back to the channel, and let's dive right into this one. Now this is the 52-week high and low chart that the Patreons get access to. You can see that I'm displaying the 52-week low right now. And I love to look at the 52-week highs and lows just to see which stocks are moving and which ones are not moving. And so I'll look at the 1 week, the 1 month, and the 1 year. And this is once again for the S&P 500. And so one thing that I noticed is that look at what three of the most declining or like stocks that have declined the most are. So you see AMD's here, NVIDIA's here, and Intel's here. And so, you know, it tells me that these stocks might have gotten ahead of their valuations, or it tells me that they might be oversold. And so, you know, for some of these companies, for example, when I covered PayPal, I said that, you know, it's down 60%, but I still think it's a little bit expensive, mostly just because I don't understand the business and how competition will impact it in the future. But for these chip makers, I don't know the story, and well, I do know the story, but I want to cover it with you guys because my thesis, at least for a guy who doesn't really understand the business, is that these stocks might be cheap. So guys, this is the tracker that the Patreons get access to at that lower tier of the Patreon, which is just that, you know, $5 a month. You can get access to all the tracker and all the companies that the tracker will track. And so, for example, you see Alibaba here, and you see how this is blue. Well, when you get access to the tracker, not only do you have all the stocks organized as a share price as a percentage of their intrinsic value, so it just goes from what I think is the cheapest to most expensive, but you can also click into this right here and it'll take you right into the model, and I'll show you some of the models in this video for Intel, AMD, and NVIDIA, and they're all different, right? All the models are different. They're built from the ground up, and they're built purposely for the company that I'm modeling. And so, you know, I think, you know, you got Intel trading at approximately 86% of its intrinsic value, the AMD at 91, and NVIDIA at 110. And so, you know, what this tells me is that, you know, if these companies are the future, and if there's going to be more consumption of chips, and we have AI and cloud computing coming and autonomous driving, etc., then the question I have is that why would these stocks be trading this cheap? And you'll see with my inputs, I'm not putting in significantly high inputs or significantly high revenue growth rates to get to these valuations. And so this is really telling me that there might be some value here. And so, you know, I wrote it right here. These are beginning to look very interesting for the chip makers. And in this video, I'll make the argument that my valuations are very pessimistic and there's substantial opportunity for these companies to outperform on the upside. And what I wanted to start with is just the semiconductor size. So where have we been? So notice how much the demand for semiconductors is surging. And like, you don't really have to see this chart to understand that, because all you have to do is live. I mean, you yourself are using more semiconductors today than you did 10 years ago. And, you know, it's pretty obvious, like, you know, from our cell phones to our TVs to our laptops to our consumer devices at home, whatever it may be, we're just relying on stronger and more semiconductors, even just like how we run our lives. Like for example, this whole YouTube thing, all the models, everything, this is all cloud based. And so it needs storage, it needs servers, it needs processing, compute power, all that stuff just to run this business that I couldn't have run I don't know, maybe 15 years ago. I couldn't have done it. And so I just found an article, or sorry, like a paper publicly available. So you can just type in Fortune Business Insights and then semiconductor forecast. And I just wanted to get sort of like the high level summary of what these industry experts believe that the semiconductor space will look like in, you know, 5 to 10 years. And so here they did a forecast where they said that the global semiconductor size was $530 billion in 2021, and the market is expected to grow from $573 billion in 2022 to 1.4 trillion in 2029. I'm assuming that's trillion. 1,000 billion, that'd be a trillion, right? I might be wrong. You guys let me know. And so that would that would be a CAGR growth rate of 12.2% during this forecast period. And so what are they saying is going to grow this thing out? They're saying that the growth of this market is attributed to the increasing consumption of consumer electronics devices across the globe. Additionally, the emergence of exactly what I was saying, the emergence of AI, the Internet of Things, machine learning technologies, autonomous driving, I'd say, is providing new opportunities for market development. And the other thing that I'd add in here is just more and more sophistication in just, everyday consumer devices. Like, for example, smart refrigerators is one that I like to use as an example. And so you're just getting smarter stuff in everything that requires more compute power. Just think about how many chips your car uses now compared to what your first car used, or a car that you may have purchased 15 years ago uses. So it's very clear that the industry is expected to grow, but I wanted to see sort of like what they thought. And so, although I do think we could see a short-term recessionary decline just because people's pockets are pinched and then they might purchase fewer products in the short term, I just think rising household disposable income levels, coupled with the rapidly growing population and increasing urbanization, create massive demand for regular and advanced consumer electronic devices, or at least that's what they say. And then, so they're saying that chips are present in several electronic devices, including smartphones, washing machines. Oh, I didn't realize they're in washing machines. TV, I guess obviously, right? I'm just being dumb. TVs and refrigerators. Perfect. That's the one I love to point out for efficient and appropriate functioning. And so, the other thing is Samsung, Apple, and Huawei, I might pronounce that wrong, are making large investments in introducing new devices to cater to increasing consumer demand for advanced devices, supporting the market growth. So not only are chips permeating devices that previously didn't have chips, like refrigerators, washing machines, TVs. I think there was a joke on The Simpsons once where the milk box had a chip in it as well. They kind of just predict the future. And so, do I think that they'll get that one right, where there'll be a milk jug or a milk box with a chip on it in the future? Absolutely, I do. But once again, in addition to that, they're saying that, there's even things that we just don't know about yet that are also going to require chips as well. And so, yes, agreed. It's just progress in terms of humanity. And so the other thing is China is expected to witness strong demand for mobile chips due to established manufacturing and assembly plants of several well-known smartphone manufacturers such as Apple and OnePlus. Now, Apple is moving some production away from China, but that doesn't necessarily mean that the bulk load of their phones won't still be produced in China. Moreover, it looks like Taiwan is still expected to experience significant growth, which makes a lot of sense. And so let's dive right into one of the models of the three companies that I mentioned earlier in this video. And so the point what I want to make is that notice how the revenue, it is expected to grow by 48% in 2022 and then start declining in 2023 and thereafter. But notice how it's just at the very, very low double digits here in 2026 and beyond. And what I'm saying here, and I just wrote it up here, is that admittedly, I'm being somewhat pessimistic when I'm growing AMD out at the single high to low double digits level. This is not even keeping up with the industry growth forecast. And recall, guys, that the industry growth forecast is 12.2%. So the point that I'm making is I'm being extremely pessimistic here, mostly because I admit that this industry is not within my circle of competence. However, the point that I'm making is that even if I admit that this industry is not within my circle of competence and I grow it out slow and I don't put a high multiple on it when I value it, I think it presents an interesting opportunity. And here's what I mean. Despite my best efforts at being pessimistic, I think the company is still slightly undervalued, but not enough of a margin of safety for someone who doesn't really know the business myself. So I might just be missing some landmines. If I am missing landmines with AMD, you guys let me know in the comments. But, I just threw a 15 times earnings terminal multiple on this company at the end of 10 years. And, I'm valuing them at approximately $70 a share. They might be a little bit higher than $64 per share right now, but that only represents 16.5 times earnings. And so the point that I'm making is I'm being extremely pessimistic, and this company is still trading under what I even think its intrinsic value is. And the story doesn't change for the other companies as well. And this is what I mean. NVIDIA is growing out slightly faster, but if you're a super bull on the semis, my models will not be correct to you. But what they will do is give you an indication that from a valuation perspective, we could very well be at the bottom for these names, and we now let secular demand take them higher. And so this is what I mean. Notice that I'm forecasting 2023 to come down a bit, which is kind of the direction at which the company's earnings are trending. And then notice that thereafter, I'm not necessarily growing out the earnings at significant growth rates. Definitely not the growth rates that the company has seen. The other thing is, look at these gross profit margins. You got 62, 62, and 65. Well, in 2023, I've brought the gross margins considerably lower, and I never bring the gross profit margins back above 60%. Even I think 60 is kind of high, but it's probably going to be around there. And so the point that I'm making is, once again, I'm being very pessimistic on NVIDIA. Some of you guys may think this is probably realistic. I don't know, because you can see that the data center, it's the only area that I'm like super positive on, and so I'm growing that out at 15%. But then gaming, no growth, or negative 25% growth in 2023, then no growth for the next 2 years, then 5% thereafter, and 10%, sorry, 5 and then 10. Same thing with professional visualization, so decline and then just trugging along. Auto, I can see more chips being used for auto. That's something, even someone who doesn't know the business like myself can see, right? Just autonomous driving, more and more technologies being put into these vehicles. Obviously, you can see significant growth here, but I'm only using 10%. So effectively what I'm saying is I'm forecasting out what I can see. Everything else I'm not really forecasting out. But some of you guys might say, hey, listen, you don't understand professional visualization. This is going to grow at 40% a year. And you're probably right. I don't have any expertise here. And so once again, very, very pessimistic. And I think with value investing, it's okay to say that you don't know, right? I think that's what saves us a lot of money. In fact, that saved me a lot of money in 2022 because I didn't go on the roller coaster ride up and down with these tech names, right? I never bought any of those Cathie Wood stocks. I never bought any of those SPACs, nothing. And so here's the thing. I believe that with this valuation, there is lots of room for an upside surprise here. And so I'm using a terminal multiple of 15 times earnings. I got a valuation of $136 per share. Current share price is $148. It might be a little bit higher or lower depending on when this video comes out. So, it is a high current multiple, but once again, NVIDIA just has a higher growth rate. And so the share price as a percentage of its intrinsic value is approximately fair value, I'd say. But, if you value this company using higher growth metrics, of course, it could still be cheap. But the point I'm making is NVIDIA is probably the best chip maker. And even with my pessimistic estimates for NVIDIA, I'm still valuing them at approximately fair value. It's not like I'm valuing this company at the current share price being, 200 or 300% of its intrinsic value, which is what I was getting at when I was valuing technology companies just a year ago. And so finally, let's get into Intel, which is the last of the three that I discussed earlier in this video. And so here, I'm saying that, I got high single-digit growth beyond 2026, and I just have slower growth up until then. So very pessimistic, and the growth is declining in 2022, which is what they've sort of guided us on. And so I think that this high single-digit growth might actually be on the low end, but the high leverage to the consumer PC market, you can see that it's 48%. It does go down, but it's never lower than 40% in my estimation. Does have me a bit concerned. I predict that declines over time with faster growing next generation technology segments as they grow. So effectively what I'm saying with this sentence here up here is that I do expect that the CCG group's revenue as a percentage of overall revenues will decline in importance to the company as these other segments grow out. And I think, they're doing a good job at being in the data center segment. I think they grow out with the cloud. I do like that they're in the Internet of Things business. I like that they still own a significant portion of Mobileye. I'll have to understand how to value this out once they issue full year annual statements, just to sort of see how exactly how much they own and what I should be putting into non-controlling interests. And then, of course, I think the memory and storage products and the programmable semiconductors, I don't really know these businesses that well, so I'm not growing them out that fast. But effectively, you can easily argue that 2024, starting in 2024, you're going to have a higher growth rate than or just a small 0.5. So pretty much like a no growth. And then, you can definitely have higher growth than 5.4% in 2025. And then, of course, greater than 9% in 2026 and beyond, because the industry is expected to grow at 12.2. So why would all of these companies, Intel, NVIDIA, and AMD, grow at rates that are slower than that? So very clearly, once again, being extremely pessimistic. So what does this mean for the overall valuation of Intel? So once again, you can see that although the other two chip makers have better technology, in my opinion at least, and I cover that more in a previous video, I think the valuation for Intel screams bottom at the moment. They really have an opportunity to surprise on the upside. And here's what I mean. I'm using a terminal multiple of 15 times earnings. They're currently trading at 14.5 times earnings, or a 7% earnings yield. And I think they're trading at 85% of their intrinsic value. And so, like, I'm being extremely pessimistic and I'm still getting a low valuation. And I think what that really does is speak to the fact that people are just scared of semiconductors. Now, what I would love to do is, and I probably will do once I put this video, to start, searching for people who know this business a little bit better and try to learn the business a little bit better myself, and just, forecast out these segments better, because I really think that this is sort of like bottom of the barrel valuations. I mean, obviously these stocks could go lower, but essentially what I'm trying to say is that I think when you look at the YouTube landscape or everything as a whole, I probably have the lowest valuations for these companies, and yet even I have to admit that they're not expensive. And so if you haven't seen my video where I recently discussed Zillow actually coming up to, I think, what I think its fair value is, and the analysts kind of missing it, and so we also had the opportunity to buy that pretty cheap, you can get to that video right here.